Hi guys, my name is Pelumi Solaru and today I'm going to be doing a stock review, and the company I'm going to be reviewing is Ocado. So stay tuned if you want to see how I look at companies. So if you want more information on how to invest for income, check out my website howtoinvestforincome.com, where it provides you with posts, articles, tools and tips on how to invest to generate income. And please do like and subscribe if you want to see more videos like this. So without further ado, let's just get stuck in. So who are Ocado? Ocado is a massive online grocery retailer. You've probably seen their names splattered on these large, massive trucks driving all around the UK. And what they do is that they process your online grocery orders and they deliver them to your door. So for example, let's say you want to buy your food online or you're shopping for the week online, you'll go to their website, you'll enter your details, they will process your order, deal with all the infrastructure in the background, and ensure the items are delivered to your door at the date that you requested. Now, the way they do that is that they partner up with companies such as Marks & Spencer's and Morrison's. So what makes Ocado quite unique is that they have a unique department that's specifically aimed at developing innovative technology. This is where they develop all their in-house robotics equipment that helps speed up and improve the efficiencies of their logistics systems. They also own about 14% share of the market when it comes to online grocery sales, which is massive. So they're in a real prime position to take advantage of the market. So here's a chart I put together of Ocado. Now this chart looks at their overall performance over the past couple of years. So on this side is their sales and on this side is their share price. So the blue line is the sales, the red line or red dash is their EBIT, which is pretty much their profit before tax. And then the green dashed line is their share price. Now from this chart, what you can see is that their sales have been growing year on year, around 60% on average, which is absolutely amazing. Companies that are growing on 6% year on year shows that there's real demand for their services, and that makes sense because, to be honest, I don't really go to the shops anymore to buy my food. I order my food online, so it makes sense that I can see that their sales are growing. The only issue I have is that they're not really converting that into profit. So their profit or EBIT, profit before interest and tax, let's say, is pretty much barely non-existent, and that, in some years it's even negative. So that shows me that they have a very high cost base. So although this company is growing in sales, their costs, their profit is not growing at the same rate. And so what that shows me is that they've really got to try and manage their costs. And so they probably have quite large technology costs, large operating costs. When it comes to logistics, companies always have quite tight margins. So they generally don't tend to make a lot of profit from their sales. So this is quite typical, or not typical, but it's easy to understand how a logistics company might struggle in this area. But the only issue I have is that if they're generating their sales, why are they generating profit at the same time? So it looks like they're putting a lot of information, a lot of resource into design, technology, and innovation. So hopefully this can materialize. Some companies like this also generally operate or benefit from operational leverage. Now what that means is that it's like a car company. Car companies need to sell a certain volume of cars before it's cost effective to actually open up the factory. And once they get to a sort of sweet spot, their sales or profitability increases rapidly because they've got a fixed cost base. Now, Ocado seems to be a company that's sort of in that position. I assume once it gets to a certain point of sort of a volume in terms of customers or sales, and it's managed its cost base, it would have a massive opportunity to increase its sales quite rapidly and take advantage of operational leverage. So what this shows me is that although they've got massive demand and massive growth in revenue, they really do need to manage their cost base in order to get that into control and turn that revenue, that growing revenue, into profit and turn that growing profit into cash. So one thing you also notice is that, as you can see, the green dotted line is the share price. So over the, let's say 9 to 10 years ago, 11 years ago, their share price was pretty much just static. And then over the past couple of years, it has risen. Over the past couple of years, it's just skyrocketed. So what that shows me is that there's a lot of demand for their shares. So people have a lot of faith that this company is going to generate profit in the near future, or generate cash in the near future. Now, for me, that's a bit of a concern because the growth in the share price is not reflected to the fundamental aspect of the business. So the concern for me is that there may be a potential for the share price to drop or reduce in the near future if these profits that people believe are going to materialize never do. So what I like to see is that a company's share price is rising and has a similar relationship with the fundamental aspects of the business. So their share price is rising as the company's revenues are rising, as the company's profits are rising along with the revenues, and the company's cash generation is rising along with the profit that is generated. So this company hasn't really got that linear relationship. What it's seen is this massive spike. So I think there's definitely a potential for the share price to be overvalued. So there's a risk there. But that's just my general opinion. It might not be correct, but that's just my thoughts. My final thoughts. I think Ocado are in a really prime position to take advantage of a prospering and growing market. Their sales have been growing 6% year on year, so there's demand for their services. And the online grocery market is also growing on a yearly basis at an exponential rate. So I think they're in real prime position, and they've also got a large chunk of that market share. So I also really like what they're trying to do with technology and innovation. They're really a technology and innovation company, which I think is banging. And it shows that they're really trying to invest in the future. And hopefully that would mean that profits do grow in the near term or in the future. Now, the only issue I have is that their share price is quite high in relation to their fundamental business, i.e. there's other companies out there that are more fair value or more closely aligned, i.e. their share price is a lot more higher than the cash or equivalent cash they generate when compared to other shares. But they're a really good company all around. The only other aspect I have is the fact that they do need to manage their cost base. Their cost base is extremely high, so they really do need to keep that under control. And once they get that under control, their profits will boom. So, my summary. So, to end, I'm going to give Ocado, from a 1 being a no-go and a 10 being a thumbs up, go ahead, I'm going to give them a 5 out of 10. The reason why is because I think they're in a prime position. Although their fundamentals aren't really there yet, they are got the technology, they've got the opportunity to really blossom and grow and be a massive and amazing company of the future. That's why I give them 5 out of 10. So hi guys, I hope you like the stock review. If you do want me to cover any other companies, please do let me know. Please do DM me or add comments in the commentary below. Please also do like and subscribe to this video so that you can be the first to get my latest videos. Well, look out for the next stock review. I'll see you soon.